Switzerland's shock, 39% U.S. tariff, highest in Europe, trade war fallout. Confusion and anger are sweeping through Switzerland as the country faces the highest U.S. tariffs in Europe. A shocking blow that has left many wondering how this could have happened. This isn't just a minor setback, it's a global embarrassment, ranking fourth in the world for the highest tariffs, trailing only Syria, Laos, and Myanmar. If President Trump's 50% tariff threat becomes reality, Brazil could leap to the top. But let's focus on Switzerland's plight for now. Switzerland's government was riding high just weeks ago, boasting of a successful meeting aimed at preventing a trade war between the U.S. and China. Swiss President Karin Keller-Sutter was assured that Switzerland was next in line for a favorable trade deal with Washington. She anticipated a mere 10% tariff, a far cry from the 31% announced earlier. However, those hopes were dashed as the deadline loomed, replaced by a punitive 39% tariff. Some Swiss politicians are quick to point fingers, arguing that Switzerland's negotiating tactics were either too aggressive or too subservient. The truth may be simpler. Trump wanted big deals, and Switzerland just isn't that big of a player. The sticking point seems to be the trade deficit, when a country sells more to the U.S. than it buys. Trump sees this as a problem, despite the fact that many economists disagree. He believes tariffs can protect U.S. manufacturing jobs, which have been lost to overseas companies for decades. Switzerland's trade deficit with the U.S. was $47.4 billion in 2024. But when you factor in service industries, the deficit shrinks significantly to $22 billion. Switzerland actually exports more to the U.S. than it imports, particularly in pharmaceuticals, gold jewelry, watches, and machine tools. However, balancing the deficit seems impossible. Switzerland's small population of just 9 million is not exactly eager to buy American products. Their cars are too big for the narrow Alpine roads, and U.S. cheese and chocolate, well, let's just say they're not quite to Swiss taste. Jan Atzlander, head of foreign trade at Économie Suisse, which represents businesses, expressed frustration at the U.S.'s on-off trade policy, which strips Swiss businesses of the certainty they need. So, what can Switzerland do now? With the tariff set to take effect on August 7th, the Swiss government is frantically trying to negotiate. Swiss businesses warn of job losses if the 39% tariff can't be reduced. But with the investment promises and zero tariffs already on the table, Switzerland has little room to maneuver. The only options left are punitive measures like withdrawing investment offers, imposing reciprocal tariffs, or even canceling the order for U.S. F-35 fighter planes. As Swiss National Day approaches, the mood is somber. Instead of patriotic celebrations, many Swiss feel they're being punished for having one of the world's most competitive and innovative economies. Others, however, are optimistic that Switzerland's history of innovation will help it weather this storm. But here's the part that most people miss. This isn't just about tariffs. It's a wake-up call for Switzerland to reassess its global trade strategy. So, what do you think? Is Switzerland's trade policy flawed? Or is this just Trump's way of flexing his economic muscles? Let us know in the comments below. Swiss watch prices in America set to skyrocket. What buyers need to know. The cost of owning a Swiss watch in America is set to rise significantly. In the realm of luxury timepieces, America is still carving out its niche as a burgeoning market. However, recent developments regarding tariffs could potentially disrupt a rare positive trend for Swiss watch manufacturers. Despite a global slowdown in luxury spending, American watch enthusiasts are continuing to invest in high-end timepieces. For instance, Swatch Group, which boasts prestigious brands like Omega and Longines, reported a remarkable increase in sales within the United States, noting a rise in revenue by double digits during the first half of the year. Furthermore, sales of Richemont's exclusive watch brands, including Vacheron Constantin and IWC Schaffhausen, have consistently surged by over 10% across the Americas for 3 consecutive quarters. But here's where it gets controversial. As tariffs loom, the question arises, will these price hikes deter American collectors, Or will they continue to indulge in their passion for luxury watches? This situation invites a broader discussion about the future of luxury goods in America. Are we witnessing a shift in consumer behavior, or is this merely a temporary blip in the market? Share your thoughts in the comments below.